In this video, I'm going to begin a new series based on the Japanese candlestick patterns. The reason I'm doing this is because the free course about candlestick patterns I posted a while ago has gained some traction, so I decided to go deeper into the subject. In this video series, I will take one candlestick pattern in each video and talk a little bit more about it, showing real historical examples of the pattern working and failing, as well as how to trade them. Before we move on, you should be aware that all the videos in this channel, including this one, are made for educational purposes only, and past performance is not a guarantee of future performance in any way. In this first episode, I'm going to talk about one of the most famous candlestick patterns, the hammer. Before we look at real charts, let's quickly review the logic of this pattern. If you don't know how candlestick patterns work, please take a look at the free course I posted here in the channel called The Ultimate Beginner's Guide to Candlestick Patterns. It's a good idea to review this free course before diving into this new video series so you can have a broader view of the subject. Let's begin by reviewing the hammer. The hammer is a simple bullish pattern, which means that the pattern is formed by one candlestick only and implies that price will be going down, and after the pattern appears, price will reverse to the upside. Needless to say, you cannot expect price to reverse every single time a hammer pattern appears. You will see that all candlestick patterns fail from time to time, and this is what this video series is really about. However, in theory, the hammer pattern implies a bullish reversal. The hammer is a candlestick with a small bullish body that sits in the upper range and a relatively large lower tail or lower shadow. The fact that a hammer is supposed to appear in a bottom and has a relatively large lower tail means that there is some buying pressure happening in that lower tail. And this is mostly where this pattern comes from. If we try to imagine what happens during the creation of a hammer, we can see that price opens in its upper range, and then it retravels to the downside only to encounter some sort of buying pressure, which makes the candlestick close on its upper range. The lower tail, or lower shadow in this case, is a mark that buyers were there to give a hint that price is about to reverse to the upside. All of that, of course, is just a theory. Let's move on to real charts to see how the hammer pattern appears and observe when it works and when it fails also. First chart is the 4-hour chart of Bitcoin against the US dollar. As we can see here, there are two clear examples of the hammer pattern working exactly as it is supposed to. Notice that there is quite a lot of difference between the two hammers, but both fit the formal definition perfectly. Another interesting detail here is that the hammer on the left has a much more pronounced lower tail, which implies a much larger buying pressure at the bottom. However, this hammer didn't lead to a bullish reversal that was as dramatic as the buying pressure implied in that lower tail. The hammer pattern on the right had a less pronounced lower tail, and it ended up leading to a larger reversal. There might be various reasons for this, but one of them is that the hammer pattern on the right is also a bullish Harami pattern at the same time. Let's now observe a few cases where the hammer pattern failed. In the second chart, we have the 1-hour chart of Ethereum against the US dollar. Notice that I'm just picking random charts. This could very well be the daily chart of a stock or the 1-minute chart of a standard currency. It doesn't really matter. Candlestick patterns work in the exact same way in all markets and in all time frames. In this chart, we can see 3 examples of the hammer pattern failing to produce good signals. The patterns were only capable of producing small bumps to the upside, even though all of these 3 patterns are valid. It's important that you become aware that this sort of thing can happen, because there is a very important lesson here, which is that relying solely on candlestick patterns is not enough to trade efficiently. You need more tools in combination to produce reliable trades that will sustain you in the long term. In this other chart, we have the 2-hour gold versus the US dollar. Interestingly enough, we have an example of a hammer pattern failing on the left and a hammer pattern working well on the right. This serves to show once again that trusting these patterns by themselves is not always a good idea. This chart is also a good candidate to show how the hammer pattern is traded. One of the advantages of the hammer pattern is that it provides an automatic stop-loss level. In other words, the particular shape of the hammer pattern automatically creates a very convenient and easy to see stop-loss level. This level I'm referring to is a few pips or ticks below the lower tail of the hammer. This is a logical stop loss because after a hammer, the trader wants price to reverse to the upside, and the lower tail of a hammer provides a cushion of buying pressure in its lower tail. The entry happens at the open of the very next bar with a stop a few pips or ticks below the lower tail. That provides a relatively small stop loss order and a relatively high reward potential, which is what traders should go after. Assuming the trader goes after a 1-to-3 risk-reward ratio using these patterns, we can quickly see that the first pattern would generate a stop loss. The second hammer, on the other hand, would generate a profit. Notice that if you use a 1-to-3 risk-reward ratio, one profit is enough to neutralize 3 stop losses, so that can give you more peace of mind when looking for opportunities. That's it for this video. In the next episode, we're going to take a deeper look into the inverted hammer pattern. If you want to take your trading skills to the next level, visit my official website and check out my paid courses. You can access the website and shopping cart links in the video description. If you enjoy the material I create, help support the channel by clicking the like button, subscribing to the channel, activating the notifications button, sharing the video, and leaving your feedback below in the comment section. Thank you very much for watching, and I hope to see you in the next videos. Take care.